Welcome to the Veriff Voices podcast, a collection of conversations with leaders from across the industry, sharing tips and valuable insight into shaping the future of online identity. This podcast is brought to you by the people of Veriff, rebuilding trust in the digital world. Hello, everybody, and welcome to another episode of Veriff Voices, the podcast where we talk about fraud, compliance, technology, and all things related to identity verification and building trust on the internet. Today, actually, we're going to focus squarely on compliance and KYC in particular. And joining me to do so is Carl-Alain Memnon, who is Chief Operating Officer at Grid Technologies. Carl, welcome, first of all, and thank you for joining us. Just by way of getting us started, how about we give just a little bit of background about yourself, just by way of an intro?
Wonderful. Thanks for having me, Chris. Happy to be here. Really quickly about myself, I started my career in Wall Street. I was an attorney for many years, working on regulatory and compliance, some M&A, capital markets, things of that nature. And so I've been working in the financial services space for quite some time.
Awesome. Okay, let's talk about Grid then. I think that's it's a very exciting venture and something that's very close to us here at Veriff as well. Let's just start with a very general sense. So what is Grid? What is it that you guys do, and kind of what's the kind of USP that you're currently working to?
Yeah, absolutely. So Grid essentially our end-to-end verification as a service solution gives fintechs and other institutions the freedom to really focus on what matters to them, and that's their business and that's serving their customers. We've created a code-free orchestration tool where a fintech financial institution can choose which solutions best match their workflow, their circumstance, and it's curated, right? So we provide the best solutions depending on your workflow, and that allows the customers to, in a no-code way, solve for KYC, KYB, income cash flow insights, fraud preventions, you name it. But I think at the highest level, what we really do is we make the verification and fraud fighting part of your business, which is not your primary business, easier so that you can get back to serving your customers.
Absolutely, I love that. And there's obviously lots of businesses out there that focus on fraud prevention and KYC. What is it that makes Grid unique, would you say?
Yeah, I think it's one, the facility of getting set up in prior experience and setting up fraud infrastructures. More often than not, you have to go to multiple providers to determine a workflow. You have to build multiple APIs. You need a team of engineers to work all of those things, coordinate with compliance in terms of workflow. I think one of the big differentiators of our system is it allows somebody with no technical background to go in and determine what their workflow is, right? So me as an attorney or my colleagues in compliance can go in, look at their use case, determine a workflow without having to bring a ton of engineers in. And then the other big thing is it's one contract, one API, right? So your workflow may require a number of different data verification sources. However, with us, you can have one API, one contract with various different data providers to help you fight fraud.
Love that. I love the idea of sort of the simplicity behind it. Is it does sort of chime with what one of our sort of internal kind of mantras here as well. Actually, is where we want to take the sort of the stress out of fraud prevention, as it were, and we want to enable our customers to focus on what they do best. So fraud fighting is not what they do best. Leave that to us, and we can go with there. It sounds very similar with the KYC element for sort of your business as well, which is great. So I love the synergy there. I suppose let's just get into the KYC stuff. And I think let's start with very broadly, we should probably define what it is we're actually talking about when we say KYC, actually. So I think we're talking really about the process that, know your customer, as the abbreviation stands for, but the process that financial institutions use to sort of verify the identity of their customers and clients. Why do they need to do that? That's probably the first question. I think more often than not, it's a regulatory piece. But do you just want to talk a little bit around that very general sort of defining, set the stall out, and then we can get into the detail a little bit.
Oh yeah, absolutely. I think there are two reasons equally important why folks do KYC. One, as you alluded to, is the regulatory reasons, right? And failing to do so can be dire. The CFPB, the Department of Justice, they will come after you if there are failures in your KYC AML process, right? And that's just a function of making sure that the funds that are flowing through your institution, one, you know where they're coming from, and two, you know who they are. The other, and just as important and very practical reason why it's important to know your customer is because you could suffer financial losses, right? You're onboarding a customer. If there's any kind of credit exposure to that customer, or if it's a deposit account and that account is being used to defraud others, there's very practical financial losses tied to that. So there's the regulatory component, and then there's the financial component. When you combine those two together, it brings the reputational component. If you fail on either one of those, your reputation suffers. And depending on the size of your enterprise, that could be a big or a small problem, but in any event, it's going to be a problem.
Yeah, and what are some of the, I mean, some of the sort of the consequences that you've seen in sort of recent years of that kind of non-compliance? Especially, I mean, obviously there's fines and things like that, but do you have any kind of anecdotal evidence of what is, really just to sort of bring to life what that impact would be?
Oh yeah, absolutely. I think TD Bank in particular has had some issues in terms of their AML KYC program, and as a function of that, they've been fined, if I recall correctly, something like $95 million. The fines that the CFPB or the Department of Justice will bring down for KYC failure are significant. Bank of America, had a similar issue. I think theirs was a probe by the Department of Justice, but it all comes down to the same thing. You know, what's the veracity of your KYC program? But then it goes a step further, right? You need to be able to show, what you did. And that's one of the important parts of our system. We take the approach of, you have to do the right thing in terms of KYC compliance, AML compliance, but you're also eventually going to need to demonstrate that to a regulator. And so there's audit functionality in the platform that we've built that prepares any institution, large or small, to say, okay, regulator, OCC, CFPB, whoever you might be, this is our program. These are the reasons why this user was onboarded. This is the checks that we made and why we came to a reasonable determination that this person is who they say they are. That is as important as the check itself. Outside from the financial loss and the reputational loss, on the regulatory side, if you are able to say, I have fulfilled my obligations, then you're okay. That is incredibly important when going through an audit, and we make that easy for financial institutions.
I love that. I love that. And again, it sort of comes back to that simplicity point, doesn't it? And is that the case for, I mean, some of the examples you gave there were obviously some very big, well-known sort of financial institutions. I guess what we're talking here is across the board, though. There are some, a small financial startup maybe subject to the same sort of level of jurisdiction, I suppose. So just want to talk about the differences there between sort of big and small organizations.
Oh yeah, I think for both and small and large enterprises, the consequences of a KYC failure can be tremendous. The amount of exposure that can come can cripple a company. So when I think about a large institution, the implications which are somewhat counterintuitive, they will get large fines, but it's really the reputational damage that is most problematic for a large institution. It's one of those things that they're in the news, everybody knows that this is going on. A lot of the times they're public companies. And so what you'll see, a lot of these bigger financial institutions are actually including it in their disclosures, right? There's increased compliance enforcement on the KYC AML processes. This is a potential exposure for us, right? That's certainly reputational, but that can, hurt their stock price. And so it's counterintuitive when you think, for them, they're a large company, a large enterprise, there's a certain level of brand recognition, but reputation remains paramount. By contrast, when you think of an emerging small business that has KYC failure, you would think that the financial burden as well is potentially problematic, right? If we go to the side of not the regulatory, but hey, you've onboarded customers, you have a small enterprise, and some portion of them are actually fraudulent accounts or synthetic IDs or whatever the case may be. There's practical consequences to that are a little bit different. The financial circumstance can take a small enterprise out of business just like that, right? It really depends on the facts and circumstances, but I think both small and large, it can really have a significant detrimental impact on your company. And some companies honestly don't survive, right? And that's big and small. right? A small company can be in a position where they can navigate, they're nimble, they can survive that. Whereas a big company, the reputational damage can, be dispositive for anybody else who wants to do business with them, right? And I think partnerships come into it as well. And that's where sort of the reputation comes along, right? If you're in the news, or if, it's just known that you've had a KYC failure, other financial institutions may be wary of partnering with you. So, that affects your growth potential as well. And so, in every aspect of your business, a failure on the KYC side can have tremendous consequences.
Yeah, I think let's just talk a little bit more about that reputational side of it, because I think it's often overlooked. I think the sort of the headline figure that people see for these fines that are handed out by the regulators and so on are the things that sort of catch people's attention. But there's almost a knock-on effect of that, where we did some research earlier this year actually that sort of shows that the end users, customers, consumers, we'll call them what you will, are really sort of starting to pick up on sort of negative stories that come out around fraud breaches, for example, data privacy breaches, or compliance breaches in this case. And I think that is becoming more and more sort of evident that actually consumers are very discerning about this stuff. And if they've heard a negative story about a financial institution not doing what it's supposed to do with their data, or not living up to compliance obligations, they're more and more likely to not open an account with that business. So we're always sort of saying, I think, that KYC has always been seen as a business cost in some ways, but actually, if you look at it through that lens, through the reputational lens that comes with it, it can actually be a customer acquisition exercise as well. In that, if you do fulfill your KYC obligations, you're more likely to attract more customers. Is that something that you kind of agree with from that sort of reputational point?
Oh yeah, absolutely. I've seen it in practice many times. Even on a personal level, a customer. If I go and I'm opening an account, the first thing I go and I check is, okay, what's in the news for this customer, for this business, right? And then there's actually me going through the process myself, right? As somebody who's traditionally has gone to a branch bank or something, and I'm going through your digital online process, and it's either too easy or clunky, or something is going on where at the end of it there's a level of discomfort, I may abandon the process altogether, right? If it's too onerous, right, and it's not sort of easy for me to do, I may abandon it for that reason. Or if it just seems too easy, I may think I don't feel necessarily comfortable, having a deposit account or opening a credit account with this company, just because I think, their infrastructure is lacking and I could be exposed, right? And if you're already in the news for that, it's most likely that a customer will come to in the first place, right? So it's the reputation side of it, but also in the actual administration of your KYC process. Consumers are becoming increasingly discerning when it comes to their products and services, particularly when it comes to the technology, the robustness of it, the sense of comfort that they get using a digitally native product, right? And more and more, we think of financial services, but there's a ton of other services that are moving to becoming digitally native, right? I think as consumers see a plethora of those types of services, they're going to be very discerning about who they choose to do business with, because everybody's doing it digitally now. You have choices.
Absolutely. Yeah, and you've hit on a really good point there, actually, is that we've primarily talked about financial services today, but I think the need for regulation, or regulation being on the horizon, is probably something that quite a few industries are starting to sort of sit up and see, actually. I think certainly the kind of online marketplaces, e-commerce, things like that. We're starting to see regulations start to, come in various jurisdictions around the world in for them. Social media platforms, dating platforms, these ones that sort of, have been very regulation light up till now, I think are starting to sort of think, oh, hang on, there could be regulation coming our way at some point in the future. So it kind of pays for us to get ahead with this stuff, and start to sort of take KYC particularly seriously as well. Is that something that you're finding as well? I mean, obviously your sweet spot is financial services, just as it is with Veriff, actually. But are you starting to see some other use cases starting to crop up as well here?
Oh yeah, I am. I'm seeing a lot of use cases in the healthcare space. I think that is a big one in the insurance space. I think there are even more sort of mundane services like car rentals and any sort of gig economy type circumstance. There is an increasing need to make sure the other side of the transaction, whom you may never meet in person, is this real person, right? There may be no financial exposure. It could be a circumstance where the telehealth circumstances where, you're getting some sort of doctor's visit or therapeutic session, there are HIPAA implications if, you're supposed to be speaking to one person and you're not. You have to verify you're providing that information to that person, right? I think, the issues around that have sort of yet to come to light. But when you think of all of the things that you do digitally, at the end of the day, you need to confirm that person that you never meet is actually the person you're supposed to be speaking to. And technology and fraudsters are getting more sophisticated at making sure that you don't know who you're actually talking to. And so I'm seeing it in a lot of different industries. And I think, one, it bodes well for society generally, right? That's innovation, that's technology, that's making services much easier for folks. During the pandemic, but for digitally native financial products, a lot of folks would have suffered, right? Because you couldn't go to your bank, right? There are a lot of things you couldn't do. Those digitally native services, in some ways save lives, right? So if we think, 10, 15 years from now, how will digitally native services change lives, right? How will it make our lives easier? And I think that's the purpose. I think a lot of our clients, that's their ultimate mission, right? Is to provide the service to customers that brings value to them, makes their lives easier, solves a major problem, right? They don't really want to be as focused on fraud as is required, right? And when I say as is required, meaning fighting fraud has to be a full-time job. And, we take it that seriously. And when you think about sort of the technologies involved, it's somewhat of an arms race, right? Who is going to be the most innovative? Is it going to be the fraudsters or is it going to be us combating the fraud? But I tell you who shouldn't be thinking about it as much is my clients. My clients should be serving their customers, right? And I think one thing we're really good at is, taking that burden off of the clients and putting it on us and giving them that level of comfort that they feel that they're protected while being able to focus on their customers.
Absolutely. Yeah, I fully concur with that. And I think that's the bigger mission of Veriff is kind of, returning trust to the internet. And I think that's exactly what we're talking about here, right? I think we've got this, a situation where many things have been made easier, and rightly so. That's a good thing. That's something that should be encouraged in terms of the digital services we're using. You mentioned sort of banking there, and the old days having to go to a branch to verify yourself and that kind of thing is just not really a done thing anymore. It feels like, and that's a good thing. It makes our lives easier. But coming with that is the other side of the coin of it has made it easier for fraudsters and people to sort of get up to sort of not so positive things as well. So it's a matter of finding that balance, I think, and I think you articulated that very, very, very nicely, actually, Carl. But let's talk specifically about the Veriff and sort of Grid partnership. Then, what is it that just talk me through it. What is it that the fraud prevention solutions that are being sort of offered here, and how does it enhance the general sort of Grid offering that you mentioned right at the beginning of the call?
Well, yeah, absolutely. So if at a high level, it's biometrics verification. I think when it comes to any KYC program, biometrics is sort of the top line thing you can do, right? There are a number of tools that you can supplement that sort of check with, but at the end of the day, I think biometrics is the most important because it really gets to the heart of it, particularly because we're not meeting people in person. And the biometric solution offered by Veriff is tremendous, and I think one of the things that gives me comfort in terms of what you folks are doing over at Veriff and what, to give my ultimate clients comfort is that with the advent of generative AI and the application of those things in video deepfakes and audio deepfakes, staying at the cutting edge of that and what you guys are doing with, the biometrics, not the iBeta, those things are incredibly important, right? Because while the biometrics test is the strongest, now because of AI, it's at risk. Right. I think fraudsters know that is the strongest way to combat fraud. And so they're coming at that with all that they have. Right. And I think, one of the really good things about Veriff is, they are leveraging the generative AI in the same way that the fraudsters are, right? I think you have to meet them where they are, and that's staying at the forefront of innovation when it comes to fraud prevention. And so I think, the work that Veriff's doing in identifying deepfakes, the lips and the different, variations of deepfakes, it's all very fascinating. I encourage anybody listening to go ahead and read the blogs that I think you guys have on it. I think we have some too, but it's fascinating stuff, but it's also scary stuff, right? If you really get into it, it's anybody can kind of pretend to be you. And so that goes back to, how do I feel as a consumer, right? If I'm going through your onboardings and I think, somebody with a deep fake could pretend to be me and access my account because your KYC process doesn't give me that comfort, then maybe I don't do business with you because,
Mm.
everybody's becoming hyper aware of deepfakes, audio deepfakes, AI, and what that's going to mean for, understanding what you're actually encountering digitally versus in person, which again, we're moving more and more away from.
Absolutely, and I think that we've got some our annual fraud report, which we publish every year, comes out next month. Actually, is includes some data on that. I think we've seen sort of a more than a 40% rise in the use of Gen AI when it comes to the types of fraudulent attacks we're seeing on our systems, and so that we're preventing and saving our customers from. It definitely is growing. I think you're absolutely right to pinpoint the biometrics angle to it. And I think that there is another aspect to this too, which kind of we've touched on a couple of times already. Actually, it's not just the best method of fraud prevention, but it's actually the easiest when it comes to the customer user experience as well. It's incredibly fast. I think we can get somebody verified using biometrics in less than a second, which is you mentioned if a sign up process is too onerous, then you'll just kind of drop out. And I think that's the balance we have to try to find, is that how can we fight fraud and ensure compliance, with at the same time making a user experience that is still sort of seamless and that can get customers through quickly? And it feels to me as though biometrics is definitely the future for that, for all of the reasons you identified there, but for that UX piece as well, which is really, really interesting, I think. I know it's a relatively new partnership between Grid and Veriff, but are there any sort of specific benefits that you can call out yet from the customers that we're working with together? Is there anything that sort of, even anecdotally, that you would sort of throw up as this is working, they're really pleased type sort of example?
Yeah, I think you touched on it just now. It's really how quickly and the ease, right? I think, if your biometrics technology works the way it should be easy for the customer, notwithstanding the fact that it is robust, meaning the technology is able to very quickly and very accurately identify the individual. And the feedback that we've gotten is, the customer onboarding, the conversion of customers has been incredibly easy. That's not a step where folks are getting held up, which is great. And on the flip side of that, there's a significant amount of confidence, right? Because we also know that these customers were very specifically verified, right? They went through this biometrics test that, is built to, identify video deepfakes and audio, all those other things, right? And there's like deepfake documents that you can do where, it's craziness. But I think going back to the point of, what we're hearing from customers is that the verifications are quick and there's a ton of confidence in the technology that it's actually identifying real folks, and then the fraudsters, right? I think for the customers, they're happy when real customers are on board and identify. I also want to know, okay, what kind of fraudsters did you encounter, right? Who almost got through, or who seemed like, they are using some new technology that, notwithstanding that we're able to identify it, we should sort of be more on top of that, right? And how we can always improve the technology, because again, it's a full-time job for the fraudsters. And so we have to be vigilant in how we approach our technology and how we improve it as well.
Absolutely, absolutely. And I think you kind of alluded to my next question there, actually, which is going to be kind of a forward-looking piece around, what's on the horizon there. Is it that just sort of continual improvement of technology in line with the sort of the fraud risks that we're seeing from I guess the continued improvement of technology on the fraudster side as well? Or what are there any other sort of challenges that you anticipate for the identity verification space, but maybe the wider fintech space as well?
Yeah, I think, The trends and the challenges that I see are almost one and the same, right? The trend is innovation, 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 right? It's an arms race, right? What gives me optimism is the other side that I see, which is a tremendous focus by folks in our industry to match that innovation. I think, it's very interesting to see the amount of time and effort being put into this very specific space on both sides, meaning the bad actors and the good actors. And I think it's, as we talked about, it's just a function of where society is moving, right? Society is becoming ever digital, right? And so, the challenges are definitely going to be technology, the innovation, the folks who are investing millions of dollars into stealing another 10-20 million dollars, right? One of the stories I like to talk about is during the pandemic, a lot of fraudsters got PPP loans. One of the ways that we describe it is that that was seed funding for a lot of fraudsters, right? And then they invested in, they created farms, right? They really approached it like, a startup building an enterprise. They were scaling their farms in the same way we were scaling our businesses, right? And so I think we're going to continue to see a lot of that. And I think, another trend I think that I'm seeing is particularly with the large institutions, you know, there has been a legacy mode of doing business of name recognition and buying the most well-known and oftentimes clunky technology so that you can say, hey, I use this, big service that has been around for 50 years. The issue with that is, it's similar to like a Sloman shield, right? If I know you're using a service that's been around forever, as a fraudster, I have the toolbox to combat that, right? And so when I think about, this fighting fraud as an arms race, I don't think it's necessarily who has the biggest army or who's been around there the longest. I think it's who's most nimble, right? Who's most tactical. And I think is in the way we approach the fraud warfare is a very tactical. We are staying on top of what they're doing, the latest technologies they're using, and we're bringing the latest technologies to bear to fight that. It's way more effective than a lot of the old and clunky and expensive technologies that I've seen a lot of these big banks use. And I think, with the coming of additional scrutiny and enforcement action, they're going to have to sort of shift and take a look and say, okay, this service has been around forever, but have they invested enough into fighting the new technologies, right? The new fraud technologies. And I think price is going to somewhat become divorced from that effectiveness, right? And I'm seeing a lot more of the big and small banks look to not necessarily legacy players, but players who are at the forefront of that battle, right? And I think that's a trend that I've been seeing increasing over time, and I think that's going to continue. I think there's going to be new players that emerge in the fraud fighting space that you've never heard of, but their technologies are going to be those that are, directly combative to the new technologies we're seeing on the fraud side.
Absolutely, absolutely, 100%. And I think that's a trend sort of we're seeing as well, actually, where a lot of our customers are more willing now to embrace kind of a multifaceted kind of fraud defense system, actually, and and including in that is using a number of different providers, often alongside each other, doing the same thing, sort of running them so that they can really sort of stay ahead of what the fraudsters are doing. They can be always online if there is if one provider has some sort of problem or an outage or something like that. There's never any breaks in their service, and the way to do that is to have providers that can work well together, that can fit into systems. It goes back to what you said in the very first sentence of this conversation about the sort of the simplicity of being able to sort of slot something into a tech stack and go from there. How good your sort of your technology or your offering is, if it doesn't play well with others, if it doesn't sync with the CSM system or whatever it may be, I think you're gonna struggle there. So it feels to me as though we're sort of opening up to a much more sort of varied landscape where there's not going to be sort of a one size fits all provider that is just going to service a particular customer. They're going to look at a number of different places for their solutions, because that's the only way to sort of stay ahead of the, for fraudsters who are opportunistic, I guess is the word. They'll try a number of different tactics until they find one that works. So if you're protecting against all of those tactics, then you should be in a pretty good place, I think. And just on the sort of but just taking it back to sort of the KYC side, then what would you anticipate, or is there any advice you would give, I guess, to companies that are sort of navigating let's still focus on the fintech piece, but the focusing on let's say the current KYC landscape, and what is it that is there any advice that you would offer when it comes to companies that are trying to sort of navigate these potentially quite complex waters at the moment?
Yeah, so I think I would give varying advice to small versus large enterprises. I think across the board, it's remain vigilant. I think when I am looking or thinking about smaller enterprises, you not only do you have to remain vigilant, but you have to sort of be prepared to be a target. A small enterprise is looked at as a potential low-hanging fruit for not having robust systems. And I think that's where, a service like ours that is built for large and small, and it is cost effective for large and small is great, because they're going to be attacked. And as you said, they're going to try various different methods, right? So you have to have a mosaic of defense mechanisms for all of the different ways they're going to attack you. So small enterprise, you have to remain vigilant, see yourself as a target, because they will come after you. A TechCrunch article or anything like that, they're like, oh, this is a new company, let's go and test their systems. I think for, a larger enterprise, you know, one, I think what everybody sees is the enforcement action coming, right? So I think everybody's on notice that you have to revisit your KYC AML processes, not in the way you revisited them 10, 20 years ago. You have to revisit them for this current market. And I think if I had to give advice to a larger enterprise, I would encourage them to look at who is doing the most innovative fraud fighting. And even if you want to start at what is the most innovative fraud, right? Because you could go down a rabbit hole looking at those. And it's very interesting just to sort of learn all the, crazy things that they're doing. But I think once you sort of go and you learn that, you'll find as a large enterprise that a lot of those big legacy players, that sure, you have the engineering team, it could do multiple APIs and all of those things, but you're not actually at the forefront. You're actually not that nimble. The fraudsters are very familiar with your system, and they've been working for years of ways to circumvent it, right? And so I think on the larger enterprise side, you may be less of a target, but you are also a whale. And I would say that it's targeted in a different way because they're familiar with the technology. So it's not like, it's new or you don't have sufficient infrastructure. It's we're familiar with this robust infrastructure and we know how to circumvent it.
Yeah, absolutely, absolutely. I think that's very wise words there. Actually, I think that's kind of wraps us up. Actually, unless there's anything else that you want to add, Carl. I mean, I know maybe just one question on sort of Grid. And what is it that the next 12 months, 24 months hold in store for you guys? Do you think?
Oh, well, the next 12, 24 months are going to be very exciting. I think we're investing a lot more in partnering with folks like you who are staying on the forefront of innovation. And we're also onboarding a lot of clients in different sectors, as you mentioned, right? I think that's one of the most exciting things is to see, clients that we wouldn't have traditionally thought, could use these verification services using them. And so I think the market is going to get larger. I think that's a great thing for society at large because more digital services means that we're making advancements and making services and goods easier to acquire for folks. And so that's very exciting for us to see, there's the financial services side, but there's also all these other, enterprises that we can work with and that we're very excited to work with. And, they're excited to work with us anytime a small company comes and says, oh, it's no code. I can really, just create my workflow and, have all these data providers and it's curated. That excites me because I was once in those shoes looking for services and I knew I didn't have that. Right. And so there's a certain lot of joy we get from, making that part of running their business easier. So again, they can get back to serving the customers because that's paramount for them. If one of my clients is able to go and just serve their customers and not worry about fraud, then that's a win.
Absolutely, absolutely. I fully agree with that, and I think it's very exciting times indeed. And I think all this says to me is that we'll have to touch base with you in 6 months or so, or a year, just to see how things are going, and talk again then. But this has been a great conversation. We've covered an awful lot of ground here, actually, and I think this will make for a really good episode. So thank you very much for your time, Carl. Much appreciated. And as I say, thank you for joining us here.
Thanks for having me, Chris. I really appreciate it.
This podcast is brought to you by Veriff. Identity verification made simple. Learn more at veriff.com.